Well, indeed, good evening. Welcome. This is KTN Prime Business. My name is Peter Wakaba. Now, the National Treasury is reviewing the interest rate capping law and will consider replacing it with a comprehensive legal framework to address shortcomings in the credit market. This is according to CS Treasury Henry Rotich, who says the review will include promoting a fair, competitive marketplace for access to consumer credit, encouraging full disclosure and transparency, real financial consumer protection through effective enforcement, and the establishment of a national norms and standards relating to consumer credit, among other developments. The government will set up... My apologies. Now, the government will set up the Kenya Mortgage Refinance Company to enable lenders access a credit, professional and high-quality large-scale, medium to long-term refinancing for their products. The primary objective of the KMRC is to operate as a private sector-driven company with the public purpose of developing the primary and secondary mortgage markets by providing secure long-term funding to mortgage lenders, thereby increasing the availability and affordability of mortgage loans.
We are seeing the support from the industry towards the establishment of this Kenya Mortgage Refinance Company really going a long way in supporting the government's initiative on in terms of the big four that the government has put forth.
Cooperative movement is going to bring in the fall is the issue of land. We have over, just from about 78 cooperatives that have given us returns, we have over 144,000 acres. When I mentioned to the Secretary of Housing, he told me, oh, we only need 7,000, so you have much more. So what you're saying, for delivery of 500 units, cooperatives can give the alternative.
This type of institution has proven to be an important factor in the launching, growth and success of mortgage finance market in other emerging countries. KMRC will serve as a secure source of long-term funding at attractive rates while ensuring sound lending habits among the primary mortgage lenders, resulting in greater availability of fixed-rate mortgages and longer available long-term loans.
Now, moving on, the Institute of Economic Affairs in Nairobi has poked holes in a move by the Communications Authority to try and impose regulations on players in the telecoms sector to create an even playing field. IEA Chief Executive Kwame Owino says to restrict the ability of firms to set their own prices is a price control scheme that is inconsistent with Kenya's overall economic policy posture and would violate the norms of policymaking in the country. Owino further said that the policy would eventually raise the cost of services to all consumers of that service.
So we said that, look, a finding of dominance alone, without a finding that that dominance has been exploited, is not sufficient evidence to go for these very aggressive measures, some of the aggressive measures. But more importantly, as consumers, we think that some of those measures that have been proposed will actually raise our costs of using telecommunication services. We need to be aware that those are the options that face us. They have not been sufficiently explained in the report itself, and the Communications Authority has done a poor job, I would say that, in telling us what the consequences would be for us as consumers.
Well, now to Garissa, where work to complete East and Central Africa's largest power plant, solar power plant in Raya in Garissa County is at an advanced stage, with the plant set to be commissioned by the President on the 24th of April. The 13 billion shilling solar power plant project, which sits on about 80 acres of land, will inject an additional 54 megawatts of power into the national grid. When complete, the plant will consist of 300 solar panels and is expected to light more than 200,000 households. According to Energy CS Charles Keter, government has commissioned 4 new solar power plants to supplement the hydropower as part of a wider scheme to reduce the cost of power generation in the country. While the Rural Electrification Authority, REA, is currently implementing about 25 solar mini-grids to power small towns across the country.
It's going to open from Hulugo all the way to Banisa in Mandera County, in Kutulo in Wajir, in Korondinle in Wajir, Hulugo, and many other substations.
The cost of this project will operate about 5 cents. It's cheaper than the thermal power plants, which are paying about 30 cents. This will only be about 5 cents. Therefore, in terms of it's nearly the same as geothermal and hydros. So therefore, it is going to be cheap.
Now to the banking sector finally, where First Community Bank's net profit during the financial year ending the 31st of December 2017 soared some 375% year-on-year to about 151.7 million shillings, driven by a 17% growth in deposits during the year, netting the highest growth in the bank's 10-year history. The growth in deposits is attributed to increased faith in the bank by the client base amid the turbulent conditions that were experienced across the rest of the economy, including the banking sector, which included a prolonged electioneering season, inflationary pressures, and the full impact of rate capping.
The improved performance of the bank is attributed primarily to the focus on the SME sector. The strategic thrust is to continue assisting the development of this segment, together with community-based entrepreneurship programs. The bank believes strongly that the future of the development of Kenya is based on a sound and thriving SME segment.
Well, on that note, we want to leave you with the financial news. A quick look at what happened at the market today from us here at the KTN Business Desk. It is Kwaheri ya Kuonana. We'll see you again tomorrow at the same time. Do continue to enjoy the rest of your viewing.